What's up everybody, welcome to the Stocks channel. My name is Corey and today we had a very bullish red day for whatever that's worth, and we're very close to seeing capitulation if we continue to close below these critical levels. However, now is starting to look like the best time to be a bullish contrarian. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in this stock market today. Alright. So today in SPY we were down 0.1% and it was a very volatile day intraday with many swings, and at one point we were getting very oversold way below the lower Bollinger Band. Now you can see that volume is starting to die off as we come into this strong support, but we did close right on top of this very critical support trendline, and we need to stay above that level to stay out of a bear market. Remember, the S&P 500 is still within that 20% range of a correction, but if it goes more than 20% down from the all-time high, it will likely enter the official bear market. We already know the NASDAQ 100 is in a bear market, but that doesn't guarantee the S&P 500 has to enter a bear market as well. So from here, you need to watch this very critical support zone, because if SPY does start losing this support right around 390, we are very likely going to see that capitulation, which essentially is just going to be a straight line down of waterfall selling all the way down to about 370 and possibly lower. Remember, I do not think we will see capitulation at this point in time. If we are going to capitulate, I think we're due for a counter trend rally. We need to see a lot more people getting bullish, and then I think we'll capitulate at a later date. That doesn't mean I'm right, so you still need to follow price action and watch that critical level at 390. And I do believe now is the best time to start getting bullish as a contrarian. If you just look at price action on the S&P 500, we have officially drawn down about 20%. So we are very close to technically great buying opportunities. And if you're buying at these levels, even if you don't perfectly catch the bottom, you are buying the S&P 500 at a 20% discount. If you're not buying at a 20% discount, then when the hell are you going to buy? Because if we don't go any lower than this, I guarantee you're going to look in the rearview mirror and wish you bought more. So whether or not we go down to 370 or whether or not we bottom down, I don't really care, because these are great levels to start adding on risk. Now you still have to recognize that that is being a contrarian, because we clearly have bearish price action with a strong bear trend. So if you're buying at these levels, you are going against the trend and you are going against everything technically other than the fact that we could be near a bottom. So don't just buy blindly and go all in, all leveraged up like you just caught the bottom, because there is no way to know that we're at the bottom. Even though I do think there is a very high probability this could be a very critical bottom, even if it's only just a local bottom for the next couple of months. So you already know getting below 390 is a lot more bearish, and our price target down there at 370. So what are the bullish breakouts at this point? Well, the first bullish breakout is going to be getting back over this resistance trend line right around 404, and then coming all the way back up to 320 and breaking above that level. If we don't break above 420, this is just a lower high in a larger bear market before we put in another lower low. So there is still a real possibility that we bounce up to 420, get rejected, and then capitulate and come down to 370. And yes, because that would be a capitulation, it would happen very quickly and it would be a huge waterfall wave of selling. So 420 is going to be an extremely critical level to break back above. So that is where a lot of bears will be hiding out. Even if we break above 420, we still have the lower high potential at 428 and right around the 430s. So again, the bulls have a ton of work going against the bear trend to break the bear trend and get bullish breakouts and price action. So understand, while I do believe these are great levels to accumulate long positions, this is still a downtrend until it's not, so you are taking on a lot of risk by doing so. In the stock market, the people that take on the most risk also end up with the most reward, so you need to understand risk management and you need to do whatever fits your risk appetite. Jumping over to the NASDAQ 100 QQQs, we were down 0.24%, and intraday we did hit the price target down here right around 284.7, and we were getting oversold below the lower Bollinger Band, and we did bounce from that level, but we still did close in the red, and we failed to retest resistance at 297. So from here, you have to ask yourself if we're going to slice down through that support and close the gap at 276.8, or are we going to start bouncing from here because we're getting too oversold and we're due for a counter trend rally? As I said, you're a contrarian if you're getting bullish because everything is still bearish on the chart, but there is nothing wrong with being a bullish contrarian, especially in the NASDAQ 100, which is now drawn down about 30% from the previous all-time high. Just like I said on SPY, if you're not buying after a 30% drawdown, you have to look at yourself in the mirror and say, when the hell do you plan on buying? So bullish breakouts in the QQQs will be above 297 and back above 305, and the critical resistance to break out above is going to be up here at 318. Above 318, we will be looking a lot more bullish, but we could still put in lower highs in the 330s and the 340s and still make a lower low. So I continue to tell you it's a downtrend until it's not, and if you're getting bullish at these lows, you are being a contrarian, and there is nothing wrong with being a contrarian as long as you're controlling your risk and you know what you're signing up for. We are getting very oversold on all time frames, and these are great levels to take on risk if you are a long-term investor and don't mind holding your positions for at least a year. I'm not saying it's going to take you a year to make profits, but that's the mindset you need to have when you start accumulating long positions in a downtrend. So watch that breakdown below the 280s to head down to about 276, and below that we could continue to go lower, but I do think these are strong support levels that you will want to pay close attention to. On the Dow Jones, we were down 0.26%, and the Dow Jones was getting way too oversold intraday, way below the lower Bollinger Band. It was getting just about $2 away from our price target, so we are getting very close to meeting our downside price target in the Dow Jones. So we've hit our downside price target in the NASDAQ 100, and we've now met our downside price target in the S&P 500, but we still do have an outstanding downside price target in the Dow Jones. So whether or not that means there's more downside coming because we need to hit this price target, or the Dow Jones is going to cut the price target short and start bouncing before we get there, only time will tell because nobody knows for sure. Just be aware the Dow Jones is trying to get down to about 310.5, and below that it is trying to get to 308. We're getting way too oversold, so there's still the possibility we get a lower high before we hit the price target. So if we do start to bounce, look for resistance right around 322.6 and 326, and we will have very strong resistance up here at 333. So remember, it's a downtrend until it's not, so respect the fact that we still do have downside price targets in the Dow that we haven't yet reached with price action. On the Russell 2000 IWM ETF, we were green today, going up 1.17%, but don't get too excited just yet because there's still the possibility it's just a dead cat bounce. We were getting way too oversold, and we still have the price target to fill the gap down here at 165.7, but sometimes gaps don't always get filled and they're a little bit of a bear trap, so don't think it's a guarantee that we have to fill that gap. However, while we have the downtrend, that is our price target, so if we do start to bounce, you're still looking for resistance right around 178, 183, and the 20 simple moving average right around 188, and all of those levels can be treated as a lower high before we go fill that gap, because you're not getting bullish until we break out above about 198 to 205. Remember that I continue to tell you that if you get overly bullish before price action confirms that we are breaking the downtrend, you can get caught holding a very large bag as we continue to trend lower. So if you're getting bullish on IWM before we reach the price target, you will want to be very cautious that a lower high can still send us back down to close the gap and hit the price target down here at 156, because it is a downtrend until it's not, and you need to be cautious in a downtrend. On the ARKK ETF, we were up 5.58% today, and I think today we need to spend extra time on ARKK because there is something very important going on that we need to pay attention to. Yesterday in ARKK, we saw the highest volume that we have ever seen trading in this ETF, and we more than likely were seeing full-blown capitulation. Remember, this has been in a bear market now for over a year and a half, and we continue to make lower lows, and we're getting very close to this price target down here at 33.7, but there's no guarantee we actually have to go that low. Now, the one thing I want you to point your eyes to with today's volume is that we exceeded yesterday's volume on a green day, so that is some evidence that people are buying into this ETF and more than likely starting to squeeze out the shorts. And this is an ETF that has a lot of negativity going around it, which means there's more than likely a lot of retailers shorting this ETF, which more than likely means it could be due for an epic short squeeze. So if you are shorting this ETF, you might want to consider covering your position at these support levels, because this could turn into a very impulsive rally. Every time a stock capitulates, it is usually due for a very face-ripping rally, and this looks like it could have indeed capitulated. So from here, I would not be surprised in the slightest if ARKK goes on a face-melting rally off of this trend line and comes all the way back up to 52 and possibly even tries to break out above the 50 EMA above 55. Above that will likely go fill the gap at 66. So you can see that would be a very impulsive bull rally of over 68% if we actually do go on that face ripping rally. You do not want to be caught shorting something that is about to go on a face ripper. And if you want to continue shorting this ETF, then just stay short below $40. But if we start breaking above 40, that will likely lead to more short squeezing. So while I'm not bullish on this ETF, you have to understand this is strictly technical, and shorts getting squeezed out of an ETF could be a multi-week event, and this could by nature send the stock higher even though it's not actually a bullish stock. So be very cautious if you're shorting this ETF if it breaks above 40, and then the next bullish breakout will be above 47 and 52. To the downside, we still do have that price target at 33.7, so you can stay short as long as we're below $40 and haven't yet hit that price target, and just watch the volume very closely. On the VIX, we were down 2.43%, so we now see the VIX closing in the red for 2 days in a row, even though the indices were selling off. And remember, the VIX is tracking the S&P 500, and SPY did close red for the last 2 days. So some people would say that this is actually a bearish event because they want to see the VIX spiking up to 38 to say that the bottom is in. But I'm telling you, that is not something you need to pay attention to in the short term. There is a real possibility the VIX has already spiked as high as it's going to go, and we are already in the process of putting in a local bottom. However, the VIX still is in a bull trend and still above 30. So if you want to be a little more cautious, wait until the VIX gets crushed back down below 30. We've seen the VIX bouncing off of this 30 zone and getting back up to 35 in a flash. So if we do see the VIX coming down to 30 but not breaking below it, it could still spike up to 38 before we put in that low. So it's a very volatile market while the VIX is this elevated, so you still need to remain cautious, and you can get a lot more bullish when the VIX starts crushing back down below 30 and then getting back down below 24. On Bitcoin, we're currently down about 3.5%, with Bitcoin still at that very critical support zone of 28,000, and we are getting very oversold as we reach full-blown capitulation in the crypto market. Now remember, I told you don't get faked out on Bitcoin because it was more than likely going to come down below support to trigger stop losses, but that doesn't mean it's going to close down here and close below support, so you need to watch the daily candle closes very closely. If the daily candles start closing below 28,000, we are very likely coming down to 20,000. But if the daily candles continue to close above support, there are people buying the dip below this level, and they are getting a better value because they're buying the panic selling and the people triggering stop losses. So set your buy orders down here. In the event there is a flash crash, you will not need to catch it. Your limit orders will already trigger if you are bullish on Bitcoin in the long term. So it's going to be a great buying opportunity in this zone, in my opinion, down here right around 20,000. And I even think up here right around 28,000 is still a good deal if you're going to hold it for the long term. However, there's nothing bullish on the chart, so you're buying this as a bullish contrarian, and we're not getting bullish until we get back above 37,000 and then back above 42,000. On NVIDIA stock, we were down 2.74% today as we continue to make brand new daily lows, and we still have the bear trend, and the price action is getting very close to our price target at 150. At this point, we're only about 7% away from reaching that price target, so it looks very doable to get there before earnings at the end of the month. And from there, I do think we can put in a bottom on this stock and then try to go back into a bull trend. Bullish breakouts at this point will be closing back above 185 and getting back above 210. And I don't suggest getting bullish until we start closing above 210. Resistance on the way to the bullish breakout will be at 179, 184, and 199. And just be aware that it's likely we're going to hit that price target before we go any higher. So even if we get a bounce from here, you're still looking for a lower high before we reach that price target. On Tesla stock, we were down 0.82% today, and the Tesla bulls are hanging in there by every thread that they can possibly hang by because they held on to this low at $700. Remember, we're in a bear trend and we're bearish below $900. But right now, you need to seriously consider if you want to start loading up at this low at $700. But if this low does break down, we could very likely go to 620 next. We're seeing high volume buying right at support, which is not surprising because we're getting way too oversold and coming into very strong support on one of the most favorite names in the stock market. So if we do start to bounce from here, you really shouldn't be getting bullish until we get back above 900 unless you're loading up for long-term hold positions and you don't mind not catching the bottom perfectly. You're still looking for resistance at 762, 828, and 856, and you're getting a lot more bullish if we start closing back above 900. On Apple stock, we were down 2.69% as we came back down to a brand new low at 142, and we did hold that level as support. And intraday, we did test another support zone right around 139, and we did bounce from that level. We're getting way too oversold on one of the biggest names in the stock market, trading way below the lower Bollinger Band. So you should be expecting a very strong dead cat bounce from here, which is more than likely going to send the whole entire stock market higher with it. We still have very strong support at 139, and we do have a gap to fill at 137, so watch those downside price targets for very strong support. If we start to bounce, you're looking for strong resistance at 147 and 150. And if we break above 150, the next leg higher will be up here at 156. Apple is a market moving stock and it is getting very oversold. So I do think this could be a great time to be getting risk on in Apple. And we already did get through earnings, so there's not going to be any catalyst. So this is a great time to start accumulating. Also keep in mind we still have a gap to fill all the way up here at 174, so if we do fill the gap at 137, you are still setting up great risk reward long trades if you buy at that level, knowing that eventually we will likely fill that gap above. On the financial sector, we were down 0.75%, and the financial sector continues to look bearish with both price action and trend, so there's really nothing to get excited about just yet in the financials. On the industrials, we're up 0.19%, and it does look like some people are buying the dip at these levels, but we still have the bear trend and we still have relatively bearish price action trading very near 52-week lows. The healthcare sector did see buying today, going up 0.97%, but we still have price action below all the moving averages and we still do have the bear trend. On the energy sector, we were up 0.42% and we did close back above $78, and we did see buyers of the dip stepping in at the 50 EMA, so we could still be holding on to this bull trend at this point. So jumping back over the S&P 500, keep in mind that these are great levels to be a bullish contrarian, which means if you're buying at these levels that you are comfortable holding for over a year or longer. Don't worry about trying to catch the bottom perfectly. There is no reason you need to stress out about catching the bottom to the exact penny. Buying at an over 20% drawdown in the S&P 500 or a 30% drawdown in the NASDAQ 100 has historically been a very great buying opportunity. Yes, it's scary, and yes, you should be fearful buying in a downtrend, but if you're a long-term bull on the S&P 500 or the stock market, then you should be thinking longer term and not just in the short term about where we're going tomorrow. However, as a trader, you need to watch this very critical zone around 390 because that could be the very key zone that could send us into capitulation or right back into a very impulsive counter trend rally. So know these levels and follow the price action and trade accordingly. And understand this is still going to remain a very volatile market until we see some type of reversal in the downtrend, because downtrends lead to panic selling, and that's what leads to high volatile markets. By definition, a bear market is a very volatile market, and we are in a bear market on many markets across the board, just not in the S&P 500. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank Trade Alerts beat the market that year and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord server, you can click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.